Hey everyone, good afternoon. This is Shubhankar here from Quantsapp's demo team, and thank you for joining the demo session for today. So the session it would be conducted by Mr. Gaurav. So he is an option trainer at Quantsapp. So he will be guiding you through some of the tools in the application and how you can use those efficiently and effectively, and how Quantsapp as an application is going to enhance your options trading. So he will be one who will be guiding you through about that. So meanwhile, if you guys face any sorts of queries with regards to the demo session, or any sorts of questions with regards to any particular tool, you can just drop your query into the chat box over here in the Zoom, and Mr. Gaurav will definitely assist you upon that. And meanwhile, we'll just hold on this session like before proceeding. We'll just wait for next couple of minutes for our other participants to join in the meeting, and then Mr. Gaurav will take the session forward. So yeah, meanwhile, you guys can just grab a cup of coffee or something, and just he will be on the session for in a while.
Hello everyone. So this is Gaurav Dakate and I'm an option trainer in Quantsapp. So today we are looking towards that some of the tools of this session is demo session. We're gonna see how you can use them in a more effective and the efficient way. And we will be looking towards the usefulness of them and why they are been made into this application. So we are looking some more participant to join in. So till the time, I will just briefly give a simple brief about the concept. So we have started 3 years back, and at the time of when we started, we have around 9 or 10 tools in our application, and from this span of 3 years, we started from almost 9 to 10 tools, and we have reached to 48 tools altogether now. So so the main point of this in this that we have 30 tools free, which you can use them, and we have 17 tools which are in the pro section and one premium algorithm tool. So that's a concept optimizer tool, which is right now available in the Android and iOS. So we'll wait for another 10 to 20 seconds, and we'll start. So we are starting our session now, and if there are lots of uh, queries come regarding a tool. So if you have particular like tool which you want me to take in the today's session, so you can also tell. So I will be taking those session, or otherwise we are taking the tools today. So I'll tell you the tools that I'm taking. So uh, backtesting is a tool that we are taking. So you can see, we see. So this is the backtesting we are taking. Then we are looking into the trap indicator, the second tool. Then these are the two tools. And if you guys have any particular tools, you can also say. Then we're gonna look into the result analysis, and the fourth tool we are looking is the chain what if. So in total, we are taking 4 tools. backtesting, trap indicator, result analysis, and chain what if. So I'll start from the backtesting. And so for the person who are coming for the first time in the concepts, as you can see the screen. So this is the new UI design which we have launched very recently, where a lot of things has been complied as per the mobile application. So you can see the banners and all the tools in the line wise. You can also we have also tried new things where you can filter the tools or analytical tools. Then you can search for a specific tool as you want, and then you also can go to the home page and the back button. So this is something which we have tried and to integrate to make the user experience more smooth. So we'll start from the back testing. So this is a back testing. So can anyone tell me why we use the backtest? Why do we backtest on a particular strategy? What is the requirement of the backtesting? And is it really a worth thing to do backtesting? So can anyone tell me their experience regarding the backtesting, or is they have an idea about the backtesting? So I'll tell what is the need of backtesting and why it's so important in the options to at least check the strategy you're making. So suppose you're making any strategy, and if you make a strategy, sometimes you want to hold that strategy for 5 6 days. Sometimes you so when you are holding any strategy for a period of time, longer period of time, you don't know whether this strategy how this strategy will behave in the different conditions. Suppose if there's a sudden change in the market, there's a sudden change in the prices of the your underlying, or if there's sudden change in the volatility of the stocks, so that could going to impact that. And so we're gonna see how why it's so necessary to have a backtest strategy before deploying it. So let's say we are taking Nifty. So for the example purpose, we are taking Nifty and we are backtesting it. So in the backtest, you can backtest since inception. So particular if the suppose if you say Nifty, so from when the Nifty has started trading derivative, you can see that. So that particular line is for the particular stock. So if you say if you are backtesting any strategy on a stock, so what you can do, you can either select from inception, so it will give that through the data from the when the company is there. So in the backtesting, you can actually backtest any stock or the index from the inception of the derivative. So you're gonna take a longer period of time here. So we, as by default, it's a 3 years. So let's take from 2015 January 1st. So the for the 5 year period, I am testing it. Sorry, my bad. January, February till now, and from 2015. So January 2015 to 4th of February, it's nearly around 5 years of time. So first, what we're gonna do? So we are taking a random strategy. So we're gonna take the straddle, add the money straddle. So first, you're gonna add first leg. So this is here where you can symbol quantity, call option you are taking, or the put option. So let's take first the call option as we are making straddle and defining whether we are buying it or selling it. So here you can say that we are buying it. Suppose you want to make any sell strategy, you can do so. Now the big point comes, and the very interesting point that comes while making any strategy. So what most of the traders do, they look into the they have the delta strategies. They look the options in terms of delta. Some looks in terms of strikes, as in whether it's out of the money, in the money, or at the money strike. Some look what is the delta of that particular strike, how could the option can move. So to bring up, to cover all the points, we have tried taking both strike and delta. So suppose if I'm taking strike here, so if I'm selecting strike, so after selecting strike and I want to look for the at the money strike. So the at the money, so if I define 0 here, that will be my at the money strike. If I define 1, so now remember, if I'm taking a call option and taking 1, that will mean that I'm taking 1 out of the money strike. I'm going to repeat it again. If I'm taking a positive 1 here, that means I'm taking 1 strike above the at the money. So that will be my 1 strike out of the money. Same way, if I take 2, that is going to mean that I'm taking 2 strike away from at the money. 3 means 3 strike away from at the money. If I take negative 1, that means I'm taking 1 strike in the money. So 1 strike in the money means that 1 strike below the at the money. So that's my in the money. Now 2 strike in the money. So this is the way I can also define these strikes in this strategy. Now I'm gonna choose the delta. So as we all know, for the delta of a call option is a positive, delta of a put option is a negative. So when you're buying a delta, or when you're buying an option, so the call option, sorry. So when you're buying a call option, your delta will range from 0 to 100. Now for the at the money, so suppose you want to select a strike of the at the money, so the delta will be near to 50. It could also be 49, 51, 48, 52. So it's gonna range from 49 to 51. And 50, so we are, for the example, we are taking 50 as my at the money strike. So if I say delta 0 to 100, so delta means, delta tells you if the underlying is changing by 1 point, how much a stock will go, the option premium is going to get affected. So delta of 50, so basically delta range from 0 to positive 1. So to remove the complication of points and all, we have tried taking 0 to 100. So simply 50 of delta means at the money. So if I take anything above 50, if I say let's take 60. So now 60 will be that strike. So it's going to be in the money. So now if you're taking any delta above 50, that is going to be my in the money. So it tells me that delta of 60, that is in the money strike. And suppose I want to select a strike which is out of the money. So let's take 40. So if I'm taking 40, that is going to mean I'm taking the strike which is out of the money and whose delta is 40. So this is the way where you can define your legs for the strike and delta with the help of strike and delta. So if I say, so for the example, we are taking strike of 0. I hope you have understood this particular part, and I'm hoping that if you have any like you have understood this part and you still have any question or query regarding it, you can also post it. I will take this part again, so don't worry about that. So we're gonna see the Nifty. We have the 75 quantity. We are taking call option. We are buying it. More precisely, we have seen delta in strike. So a strike of 0 means at the money, I'm gonna add. So this is how I deployed my first leg of the strategy. Now I'm gonna add one more leg. So Nifty. Now as we are making the long straddle, call option by strike of 0. So now the 0 of call option, that means at the money strike. 0 of put option, that it means at the money strike of for the put option. And we are buying it. So that's a long triangle. So this is the strategy I made. So it's so easy to identify my symbol, select the period of backtesting I want to do, then by adding legs, I can define my strategy. So I would say 80% of the work has been done. I don't have to see anything more now. Now we have to just remember that whether, so suppose you're more interested in making a monthly strategy or the weekly strategy. So for the index, you can select monthly and weekly both. But for the index, you can only select the monthly as the sorry, for the stocks, you can only select the monthly, because the stock has the monthly expiry and index has both the expiry. So one thing you should be looking into here. So as of now, we are taking the monthly expiry. Now I'm gonna come to the last part of my back testing. Excuse me. So we are on the last part of the back testing tool. So now say I'm looking and making a strategy where I see the strategy to be that I'm going to initiate this strategy, let's suppose 22 days before the expiry. So suppose we have the expiry on February, expiry on 25th. So I'm deploying this strategy 22 days before the expiry, and I'm exiting this strategy on the expiry day. So if I select 22, means 22 days before the expiry. Means if I select 20, that means I am initiating this particular strategy 20 days before the expiry. I hope you have understood this. Now we have the OI and the volume. So sometimes what happened that when we are making any strategy, we take the out of the money strikes, and the problem with the out of the money strikes, that of the volume and the OI. So sometimes strategy like out of the money strategy for the I would say stock option don't have that much of the volume, which should be considered and which is very important to look into. So suppose you think that stock or the index is going to have a movement, and based on that you made a strategy. But what happened when you try to make that strategy into the live market? You see there's no volume. There's no volume actually going on in the particular strike, and that is the case where you get stuck. So you should always be remembering this part, that OI and the volume is also important. So according to you, you can choose the OI and the volume for this strategy. Then you have the trade to expiry. So I explained that on at how many days before the expiry I want to exit my trade. So I have taken 0. It means the strategy I'm making, I'm exiting that strategy on the expiry day. So suppose we have the expiry on 25th of February of this month. So I will be exiting that this strategy on the expiry day. Then I can take my target profit and the stop loss. So this you can do by looking into one's risk appetite. So we have taken all the inputs. Now I'm gonna just backtest this strategy. So I think you have understood how easy it is to actually put your strategy into the backtesting mode, where you can see for the how long you can see the payoff. You can see for the which legs you want to take, for the expiry time, whether you're taking the monthly or the weekly expiry. You can check the trade initiation and the trade exit. So looking into this particular strategy, what we just made, I can say one thing, that the win ratio is more than the total win profit is more than the total loss of this particular strategy. Now looking here, I can see for this particular strategy the strike rate is 45. So now what is strike rate? Why we have take Quantsapp is putting this term. So strike rate means that 73 times this strategy came, and out of 73 times the win count was almost 33 and the loss was 44. It means in the last 73 times, if you have deployed this strategy according to this days, you would have won 33 times only, but you have lost more than that, that is 40. So this is one point you should consider, that the strike rate is below 50. Now you have to just remember one point when you're looking at this strategy. There might be many outliners that have made a drastic win, or there's a drastic profit or the drastic loss. So you should always look that point. So if I look here, this is a point of COVID. This is the almost March or April 2020. So you can see the gap. Sorry, you can see the gap of profit that came here, and this is, I think, the maximum win from this particular strategy. So you can track. So you can say. So this is a point where you can say how the strategy is going to look into how the payoff had been in the previous days. But while you're backtesting any strategy, always remember that a particular time is very important, because if I, for the same strategy, if I look into on the based on 20 days, means I'm initiating this strategy 20 days before the expiry. Now I don't know how this strategy is going to behave, but there might be some changes into it. So it's just loading here. So just it will take a 10-20 seconds. So now you can see the change in the payoff graph. You can see how the payoff has changed. Same for the last 5 year, but we have changed for 22 to now 20. Now you can say the change in the profit. You can say the change in the strike rates from 45 to 48 days, profit and loss, and total loss, profit and loss. So this is how days are very important. If we play more with this, if I test, if I'm initiating 15 days before, and I want to see how the profit and loss, and I'm exiting on the date of expiry. So these are the points you should be looking into. This is a point where you should having your mind focused on that when you are trying to exit your strategy, when you are trying to exit your strategy. So initiation and exit is a very important. Now look here. If I say I want to initiate this strategy 15 days before the expiry, you can say the profit which were of 2 lakhs total profit and loss, it just came to 55,000 almost. So this is what the drastic change your initiation and exit can do. And if you can manage this, the initiation and exit, this will be going to bring that, going to change your backtesting to the next level. So you can see how powerful this tool is, which tells you a lot of things, that how a strategy pay off, how the strategy strike rate, total win, total profit and loss will going to change as you are deploying this strategy at a different time. Now I'm backtesting this data 2 days before the expiry. Matlab, so I'm exiting this strategy 2 days before the expiry on the 15 days of initiation. I hope you're getting the points from the backtesting. I hope you will be looking forward how you can utilize the backtesting tool in a more effective way. Now you can see the total profit and loss. You can see how the strike rate has changed from 48. It changed to 436. It tells you that out of 73 times, only 26 times you have won if you are making a combination of this. So this is one point you should be looking into. This is a point where you should be having your edge, that how a particular strategy is going to perform depending on the days. So this is the backtested data that has happened in the past. Not necessarily the same thing is also going to happen in the future, but having your backtested data gives you the more significance edge over the non-backtest strategy. And taking the combination of the days, initiation and exit, gives you the more edge over the non backtested strategy. So I hope you have understood this particular point. I hope that you have got a lot of things to look into the backtesting. Now looking further into the PNL. So you can see how the profit and loss from this strategy was. Then here comes the main thing. So let's just take it down. So we have initiated from January 1st, 15 in the span of 15 days. So we are initiating the trade 15 days before the expiry. So this is the trade settle. This is a trade and exiting 2 days before the expiry. So I think the expiry of the January 2015 will be on 29th. So if we are exiting on 27th, and you can say that we are initiating 15 days before the expiry. So this is 14th of Jan to 29th will be 29th Jan of 2015 was my expiry. So you can see that from this leg, from a particular leg, so you can see your at the money strike of that time. At that time, what was your at the money strike for the call and put? So depending on this legs you are taking, then you can see the expiry date. Then here you can see the M to M from both the leg. So how much a particular leg has earned and particular leg has lost in this particular span of this particular expiry. Then you can see the total profit and loss from this uh, particular expiry. So here you're getting the handful of the information if you're making any strategy, and then you can also see how the market condition was there at that time and how the movement went. So I hope we have you have the clear knowledge that about the backtesting, and I know ki it's not only it's going to be easy for the first time or second time, but as you are giving your time into the backtesting tool, you will be having a good amount of knowledge that how a particular strategy works. You can also make your custom strategies here, and you can backtest them for the period. So if you have any particular question, you can put on the chat box or the comment section, and we're gonna take the question answer in the last. But meanwhile, you can also put the questions that my team is looking forward, and we'll have the altogether questions in the last. Now moving towards the next tool we are taking. So we are looking into the trap indicator. So we are taking all the question in the last in the question and answers time. So now we are into the trap indicator, and what is trap indicator and why we are looking here. So I'll just give a small brief about the trap indicator. So first thing first, trap indicator is a Quantsapp proprietary tool that Quantsapp has made this particular tool. And so that what trap indicators do, it catches the open and the trap positions of the writers. So writer could be anyone, it could be the call writers or the put writers. So trap indicator is particularly catching the open and the trap position of the writers. So writers are the one who takes the maximum risk, the risk of unlimited loss. Then they also have the obligation on the expiry day. So there are lots of things that's why looking at the writer side is more important, which they gives the more significance of the data. Sorry. So writing trap indicator is just that too. Now so on the back of the back on the back end of this tool, there's lots of algorithm that are going on, and some of the basic input that this tool looks into for giving any signals or telling that or which at which stock the writers are trapped. So it takes the price movement, obvious first thing. It takes the volatility, it takes the open interest and the volume into consideration. So it takes all these factors into consideration. Sorry. So it takes all the points into consideration, and it continuously evaluate all those points. So so algorithm is continuously evaluating all these points: open interest, volume, price, IV, to check whether the stock, any stock from the F&O segment is that in which writers are trapped or not. So we can't go move further that how the actually it works, because it's a proprietary tool. So so we can't go. But I have given an overall view that is catching the open and the trap position of the writers, and we're gonna see what this trap indicator is doing. So first we have the signal, symbol, close, signal date, signal price, and written. So what is all this about? So trap indicator is providing the signals based on the open and the trap positions of the writers. So trap indicator is going to give you the signal to buy, signal of buy and sell. So we can see it has given a signal of buy and sell. So this, for the particular disclaimer here, so this is not a advisory tool. This is not a any advisory kind of service, and just a tool which gives the signal. So this is algorithm tool which is giving you the signal of buy and sell. So put that disclaimer. This is not an advisory or any specific service. So this is a tool which provides you the buying and selling signals. Then signals it gives on the stock where the writers have stuck. Now you can see the signal date, you can see the signal price and the close price. So for today, the 4th of February, it has given lots of signals. So you're gonna see from the below. So for the 29th of Jan, 1st, 2nd, and 3rd of Feb. So from till 3rd of Feb, we have this sort of stocks where this algorithm has actually catch the open and the trap positions of the writers. So if we look into the different stocks, SBI, it has given the buy signals. So for the buy signals, you can say the closing or today was 360. It was given on the 1st, and you can see the signal price. It is a signal price of 313. So on the 1st, it has given at the price of this. Now the price of the price of SBI is 360. So you can see the return from this particular signal. Then the same way L&T, it has given the buy signal. You can see the return. Then on 1st, it has given for the Bajaj Auto buy signal. You can see the return of 2.5%. At TCS, buy signal 1.7%. Bajaj Finance, Grasim, SDFC Bank, ICICI, Ashok Leyland. You can see the actually returns that has given. So on this, also if I say ICICI Bank or SDFC Bank, it has given return signal on the 1st of February, signal price, and you can see the today's price, that the today's closing price, and you can see the return generated from this particular algorithm. So it's also a good very powerful algorithm that is running behind at the back of this particular tool, which is catching and the open-ended trap positions of the writers. And it's not necessarily it's always going to make in the profit, but as we have seen from the trap indicator, uh, almost every time it has given the good return. But on the losses side, if you see, there's only there's two only signals which have been generated on the Industrial Bank and the Shriram Transport Finance. There's a two only stocks where the negative return has been generated from this algorithm. Apart from that, you can see the return that has been given from this particular algorithm. So this is also one of the very powerful tool which has been made by the Quantsapp, and this is a proprietary tool of the Quantsapp, and it gives a good return. It's actually trapping the open-ended trapped position of the writers. Now, so this was the current which has been given. Now here you can filter by signal, so you can filter by buy signal or you can filter by sell signal, then filter by date. So for the sell signal today, Wipro and Asian Paint came into this particular algorithm. It has given the sell signal, and then you can filter by particular date. So this is what you can look into. Now we'll move towards the chart. So what is chart? So chart is nothing, but it's just giving me that when the prices are moving, so you can see from almost January, I think. Oh, so okay. So it's from almost 7th of Feb 2020 to today, till today. So we're gonna look that at what time, at when, so not the time, so at which date the trap indicator has given the signal of the buy or sell on the period, on the period. So we have the Hero Motocorp here. So we'll take Nifty only. For the example, we are taking Nifty. So this is the Nifty. You can see the Nifty prices on the left Y axis, and the period, that's a month, on the X axis. So moving forward, you can see if you see the red on the graph, that means that is given the sell signal. And if you see any green, that gives you the buy signal. So on the graph, you can see for the past 1 year, it has given this buy red and green signal, that is sell and the buy signal respectively. And even if you notice here, if you say here, this is a big move that came from almost price was 10,800 to 11,900. That was a very big move. Then here it was a very big move, but no signals were generated. Why? Because this particular algorithm couldn't have that much of data to evaluate whether it was really like whether there was any option writers where it was stuck or not. So the algorithm that is going on, it's very powerful. That's actually taking care of lots and lots of inputs over there, and on the basis of that, if the signal is confirmed, it feels that algorithm has a proper data to look into, then only it is taking the trade over here. So we have from 2020 we are looking, so we look from 2019. So you can see over the period of time. Now looking towards the table side. Now the table side gives me a more detailed view. So table side says signal, entry price, entry date, exit price, then exit date, exit price, and the return. So here what you can do, you can see one second. So you can see that from here, when was the entry date, previous entry date, when like lastly when the signals have been generated, entry price, exit date, exit price, and return. So we'll see everything here. So you can see the quantum of return that this particular tool has generated. So if you go below and below, so there was some points where the losses has also been there by the signals, but the quantum of loss, you can say, it's very like on the low side of 0.5% or 1%. So you can also keep this point in the mind while looking into it. So if we see any other stocks, let's say maybe SDFC Bank or ICICI Bank or any other stocks, we're gonna see. So if I select ICICI Bank. Excuse me. So now we can see from here how the previous returns were given by the ICICI Bank, which has been given by this algorithm. So from here you can see the previous returns as well for this particular period of time. Let's take another stock, Reliance. So if I take Reliance, so you can say the quantum of negativeness is very less. It's just around a 1%. So you can also keep a percentage of 1% of the stop loss, or somewhere around to the 1% of the stop loss while trading, while looking into this particular trap indicator tool. So you can see the returns. Even you can see there's a no profit, no loss scenarios as well. You can see the profits, the quantum of profit on the high side as compared to the to the low side. So you can see recently 10%, then 7%, 5%. But if you see the while looking on the downside, you can see the quantum of downside is not that much, except for the one time. That time I think the algorithm must have the proper data, but not necessarily it's always going to be correct. But you can see the quantum of profit from this particular tool is much more than the quantum of loss, and there's lots and lots of input that this particular algorithm is running on their behalf, and the basis of that it is generating the signals for the buy and the sell. So hoping that you have understood this particular tool, trap indicator, and I can't go deep into it as this is a proprietary tool of the Quantsapp. So that's one point. But I have given a lot of overall view of what is this particular tool is. I hope you have understood. And if you still have any particular question, you can put it in the chat box. Now we're gonna move to the third tool as we are taking today. That is open interest, chain what if. So we all have seen the chain. We all are familiar with what is chain. We're gonna take Nifty first. So for the example purpose, we always for any example we take the Nifty only, because a lot like almost we all are familiar with the Nifty only. So better to take the Nifty. Take the monthly expiry. So we'll have a broader range to analyze our data. So now looking here, and if I want to, and we all have seen the chain, almost we all do see chain in the almost one or twice or thrice in a particular period of particular times in a particular day. For me, I do check chain. I look into the option change a lot of time in the whole day, and I see how the how the premiums are going, and the other things. So for the chain, you can see the chain for the particular strike. what is the premium, how the premium is changing, what are the volume, change in OI and the IB of that particular strike. Then I also want to look into the Greeks. So I can do all of this from here. But now today our point of view of learning chain tool is to looking into the what if analysis. So there are lots of things like when we buy an or sell an option, short selling or writing an option or buying an option, we generally try to hold it for a longer period of time as per our expectation. So I'm assuming that I will hold this particular option for 3 days. Sometimes I end up holding this for 6 days, 7 days. One thing we don't analyze is impact of volatility that could drastically increase or decrease the option premium. That is one more point we should be looking into. We should be looking into how and why volatility is so important to look into the options while making any while taking any positions. And thirdly, we will see the impact of underlying change. So we all know when the prices are going up, we have all know that we'll take a call option, we'll buying a call option. When the prices are going down, we'll buy a put option. But have you ever tried looking into that how much amount of movement is required so that in the underlying prices, underlying movement, so that the option premium will change? Have you ever thought of what if the underlying movement does not came as per your expectation, or even it came but you hold it for a longer period of time, you will start losing money, the option premium. So this is the point you should be looking into, that if you are making any strategy, if you are looking towards holding a position, then what could be the impact of days to maturity, IB change, and the underlying. So let's take 14,900 call option. So we can see the price is almost 282. So first thing we gonna see, suppose I want to look into this call option, and I'm expecting that Nifty will go to 15,000. So I'm just taking an example for creating and analyzing the lots of things. So if I say that Nifty will go 15,000, so I will change my price. So now I'm taking the 15,000. So if I'm updating it, so you can see the call option of 14,900 went to 341. So almost 60 rupees change that came in the call option prices. So I have taken the at the money. So black strip indicate the at the money, the red shaded area. So this is the red shaded area. This is the red shaded area. You can see this is the out of the money for the call option, and this is for the put option. And this is the green shaded area here and here. So you can see this green shaded area is for the call in the money, and this green shaded area is for the put in the money. So you can see the out of the money, in the money, at the money strike in the color coding. And color coding helps you to have a view, and you don't get confused when with the help of colors. So colors simple. You can actually memorize this. Red here means out of the money, green here means at the money, sorry, in the money, and the black strip here indicate at the money. So now moving towards, so if I say that underlying went to 15,000 and the call option price went to 341 rupees. So this is a good enough. So this is explained by the underlying. So if underlying movement, if there change underlying, if the movement is coming in the underlying, I can see that premium is going to change. Now I want to analyze, I want to see what will happen. So this is the today. What if today went to 15,000? So I'm sorry. So I was actually analyzing this call option. What will happen if the it will go to 15,000. Now say that I was looking for the level of 15,000 और देखते देखते 9 दिन हो गए, and for the 9 days the level of after 9 days the level of 15,000 came. So just imagine the price from the I think 341 dropped to 10 from the negative to the 272, and the original premium was 282. There is decline of 10 rupees. So you can say, even though you are having the view, your view gets corrected. I'm not saying that you had a view of 15,000 and you thought when this underlying that the Nifty will come to 15,000, I will make money. But actually, sorry, even though the underlying came to 15,000, you can see the call option of 14,900 is still in the loss. And why so? Because now the time to maturity, as the option is getting time closer to the time to maturity, is losing more and more premium. So this is the point which I want to bring, that आप सोच रहे हैं 15,000 तो आएगा, but कब आएगा, that is so important. Even I say that the moment came in the 4 days, can see the only the that premium increased by 30 rupees only. So this is why having your view is good, but more importantly, putting your view in the practical way, looking when this movement will come and when it will come and how it's going to affect. This is the day when you're having a view. This is much more important than looking at your view. So if you even have the correct view and you say that 15,000 तो आएगा बॉस, पर आते आते 10 दिन निकल गए, और 10 दिन में you can see you will be losing 20 rupees of your premium if it take 10 days to come to the maturity. So this is why analyzing your options is very important, looking into the underlying change. So say suppose if this underlying went to 50,050 on the 10th day, so you can say if we raise to 1550, it actually giving the profit of 10 rupees, 10 and half. So this is a point which you should be analyzing, what will happen to the option premium when the underlying is changing, when the days to maturity is changing, as the option is getting close to the days to maturity. Now this was the two important part. Now we're gonna look into the fourth and the most important part, that's the employed volatility. And trust me, employed volatility will going to change each and everything within a second or within a moment. So if you have seen the, I'll take you just quickly to the IV tool. So you will be having a very good idea. So I'll take the IV chart. So we also have the IV chart where you can see. So let's say on the, so this is the 2020 scenario which I am taking. So this was 11th of March. So you can say the IV was 33 here. You can see here, you can see from here. So on the 11th of March, the IV was 33 and it went to 136. So it was on 11th. In the span of almost 10 days, it went to 136, and below that, on the within a period of 2 days from 24 to 26 Monday, it just halved. So we're gonna analyze what will happen if there is a sudden increase or decrease in the volatility. So we're gonna take our scenario back 15050, and we have, let's say 5 days too, and we are holding till 5 days. So this is my option premium right now. Now say volatility increased by, one second, volatility increased by 25-26% in one go. You can see the amount of gain was only 30 rupees. Now it went to 116. Even I take this for the 9th day. So आज जब हमने लिया था उससे 9 दिन हो गए. We are still holding the option. Price went to 150, and we have seen the surge in the volatility by 26%. And you can see that the premium is now worth 75 rupees more what it was earlier. So you can see now the premium, now the option premium is 357 from the earlier of 282 something. So this is what volatility is. Within a moment, the volatility will change. The volatility will actually change the option premium in a one go, and it will be very difficult to catch the movement if there's a sudden change in the volatility that comes. Now say if the possibility of volatility to increase, there's also the possibility of volatility to decline. If I say the volatility declined by 23%, let's say 20%, you can say even though your option is in the money of where it went, oh, sorry, even though you can see their option is in the money now, but because of the decline in the IB, you can see there's a huge decline in the option premium. Now you are losing 24 rupees. So the point of doing whole analysis is to gain a knowledge that just looking into that the looking into a view that Nifty will go, sorry, any underlying will go up or down, and taking your trade on the basis of that is good. But analyzing it, that what if it took a lot of time to go up and your option is getting too close to at the to the expiry, then you are losing from the theta value. You should also be analyzing the impact of volatility, how the volatility is going to impact the option premium. So this is one case. So mixing all these scenarios, having the combination of it, is gives us a better and a good picture of lots of things, that how you can look into all of this data. So I hope you have understood this particular part, and I would say that before making any trade or before taking any trade, it is very necessary, or I would say it is very becomes very useful when you are analyzing all these things, because we have taken just a big expiry. I'll tell you what will happen if we take the expiry which is very nearby. So we have taken the next week expiry. So today is Thursday. Suppose you take a trade on Monday. So we are analyzing 14,850. The call option is around 167, 169. Okay. Today is the days went. Tomorrow is your Friday. Suppose you take a trade on Friday, then on Saturday, Sunday, and on Monday market opens. Now I can say the premium of 169 fall to 113. You can see decline of almost 55 rupees. If you hold this trade for the till Monday and there's no movement in the underlying, suppose koi movement hi nahi hai, there's no change in volatility, and you will be losing 55 rupees. Now if I say that on Monday that market went to 867 to 950, 14,950. Now even you can say that almost 50 60 points still losing the money because of the theta. So theta becomes very important when you're holding the weekly options, because at the weekly option you require a big movement to get the premium to get earned from the buying an option. So this is what you can analyze. You can see clearly the impact of holding an option for longer period of time. So this is all what you can do with the help of Quantsapp option what if tool. You can see the impact and the of lots of things. So I hope you have understood this particular tool as well, and I'm hoping that you will use these tools and to analyze all the scenarios which you can which could possibly happen, and believe me, this gives a very big insight of the changes of the option premium. And we have seen the live example here also, that what will happen if the Nifty will remain to that same particular point if there's no movement come till Monday. So this is the point which you can do all these things where you can actually analyze lots of things. So now we are taking the question answer session, and you can post your all the questions in the chat box, and we're gonna see. So for if you have any questions, you can also take in the chat box, and we will see how we can how I can help you with all of those. So I'm just waiting for your questions, and if we so I'm hoping that we have all understood the tools we have taken today in the demo session. And if you still have any particular query regarding any of the tools apart from this, you can also connect to the advisors in the Quantsapp, or you can also put a mail on the support@quantsapp.com, where you can put your queries regarding the tools, uh, regarding the membership of the tools. And if you have liked this today's session, you can also comment on the YouTube where we are live right now. So you can also comment over there. You can put your valuable feedback. You can also rate us on the Play Stores and the App Store. You can give your ideas and suggestions as well. And you can also give us rating, which will help us to grow more and more, as we'll bring more and more tools to help each retail client in the market to grow as a good option trader. So I would request all you guys to rate us on the Play Store or the App Store, and you can also put your valuable comment over there. And that's all from the today's my side, and I hope you have liked this video. I hope you have enjoyed this demo session. You have gained a little bit more knowledge about the tool. So it's time to so yes, Mr. Sunil, you can see the recording. So this recording will be available on the YouTube after this session. So if you go to the Quantsapp, you can also follow us on the YouTube and the other social media. You can go to the YouTube, you can search for the Quantsapp, and there we have all the all the demo session. We have the webinars. We also have the videos on basics of options, various strategy. We are also bringing more and more videos on different topics of the derivative, and I hope you will see all of them. You will gain a good knowledge from that. So that's all from my side today. And if you still have any question, you can contact to the advisor in the Quantsapp.